Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, an important signal is flashing again on the daily time frame, while this pattern in the short term is just about to complete. So I'll be talking about that later in the video. Definitely watch to the end. First of all, in case you do not follow me over on my Twitter, what happened with yesterday's Fed meeting was essentially the Federal Reserve decided to pause their rate hikes, at least for this meeting. And so considering the fact that the majority in the market already expected that was very neutral. That alone didn't really affect markets all that much. But what did affect markets was the fact that the Federal Reserve decided to signal 2 more rate hikes to come, 2 more 25 basis point hikes to come, meaning a total of 50 basis points worth of hikes still to come, despite the fact that the market is only pricing in for 1 more 25 basis point hike. So basically what this means is that the market has to then price in another 25 basis point hike. And as I've explained in recent videos here on the channel, the higher interest rates go, the more bearish that is. So if the market has to price in for higher interest rates, of course, we're going to see a drop across markets as the markets are pricing that in. So that is essentially what happened with the latest Fed meeting. And once again, if you want real-time updates on all of that, make sure you follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. But anyway, now getting into the Bitcoin part of this video, this is on the 4-day time frame, taking a look at the super trend indicator. And right now, as of recording this video, the price of Bitcoin is getting extremely close to the invalidation level for this larger multi-month long bullish trend that we've seen since the very beginning of this year. And now, obviously, for those of you who have been watching my videos since the beginning of this year, you would know that I've been bullish pretty much non-stop on the larger trend since the beginning of this year, since below 20,000. And then, of course, within the larger trend, we can experience shorter-term bearish trends. But soon, this could potentially change if we do not see a bounce soon in the price of Bitcoin, because the invalidation level, according to the super trend indicator, at least on the 4-day time frame, is currently sitting at around 24.3k approximately. So basically, if we see a confirmed break back below 24.3k, then that would provide an invalidation signal and actually a reversal signal here on the 4-day time frame by flipping this indicator back into the red. And now, of course, no indicator is 100% accurate all the time. So obviously we can see some false signals. That is, of course, a possibility. But with that being said, historically speaking, this indicator has been very accurate throughout Bitcoin's history. And so usually when this indicator reverses here on the larger time frames, we usually see a larger trend head in the opposite direction. And by larger trend, I mean a trend on the larger time frames that lasts for at least a few months, or in some cases, even up to around a year, like the 2021 bull market, for example, or the 2022 bear market. So obviously 24.3k will be an important level for the price of Bitcoin to hold in order to stay within this bullish trend, according to this indicator on this time frame. And once again, we would need to see a confirmed break below that level, meaning a 4-day candle close at least below 24.3k. It is okay to see candle wicks to the downside, because of course that is what we saw back during March this year, and that did not invalidate the larger trend. So we need to see a candle close below 24.3k. And now, if you're taking a look at the daily Bitcoin chart, obviously right now the price of Bitcoin is running into this significant area of support, sitting in between 24.3k and 25.3k. And so once again, this is really the last significant area of support for the price of Bitcoin before potentially confirming a larger trend reversal. And now, obviously, just in the shorter term here, for a few weeks, we have been in a shorter term bearish trend. But as always, I try to make it clear that there is a difference between a shorter term trend and a longer term trend, because once again, it is possible to experience a short term bearish trend within a larger bullish trend, just like how we can experience a short term bullish trend within a larger bearish trend. And so essentially what we could soon see is the shorter term bearish trend now become a larger bearish trend on the larger timeframes. But once again, that only happens if we see a confirmed break below this support. And now in that case, if we do actually see a confirmed break below 24.3k, then in that case, looking at the Fibonacci levels of support on the logarithmic scale, our next Fibonacci level of support on this chart is the 38.2% Fibonacci level, sitting at around 23.8k. And if we see a break below that level, then we have the 50% retracement level at around 22,000 approximately. And below that level, we have the golden pocket where we also saw this previous low come into play, which is a range sitting in between around 19.8k to 20.1k. So those are the next important levels of support on the daily time frame that I'm watching if we see a confirmed break below this area of support. And as for the daily Bitcoin price oscillators, right now these are of course looking more bearish than bullish after a shorter term time period of looking quite neutral, because obviously for the last few weeks the RSI has mostly been chopping around sideways alongside the price action, but only just recently has the price action began to dip a little bit more into this area of support alongside the RSI now beginning to form lower lows. And if you're looking at the daily Bitcoin MACD, this is of course showing some more bearish momentum, but with that being said, we still have relatively low momentum compared to some of these previous movements. And just to follow up on that potential falling wedge pattern which was forming recently on the daily time frame, of course over the last one day we have seen a successful candle close on the daily time frame below this level of support, which was sitting at around 25,500. And now statistically speaking, that was actually the less likely scenario, because a falling wedge pattern only breaks to the downside roughly 3 times out of 10 and actually breaks out to the upside around 7 times out of 10. But obviously this just so happens to be one of those 3 out of 10 times where we do sometimes see a break to the downside from a falling wedge pattern, even though it doesn't happen too often. And so now this is the case, of course, this falling wedge pattern is no longer forming on the daily time frame, and so instead I'm simply paying attention to these areas of support. And now if you're zooming into the shorter term, this is on the 8-hour Bitcoin to US dollar chart, and obviously over the last one day we have seen another strong rejection from this area of resistance, which is still sitting in between around 26.1k to 26.5k. And once again, as I've said over and over again over the last few days, while the price of Bitcoin is still below this area of resistance, the short-term trend is still bearish. And now, of course, just recently we have seen a small bullish divergence play out in the imminent short term, which has resulted in a small pause from that short-term bearish trend. But with that being said, obviously, while the price of Bitcoin was still below this resistance, the short-term trend has not changed. So, of course, the short-term trend, once again, is still bearish, which means I would not be surprised if we do see a continued pullback in the short term. But once again, this could potentially carry over to a larger bearish trend on the larger timeframes if this support breaks. And now what's interesting is if you take another look at that 8-hour Bitcoin chart, we are forming a possible bullish divergence again, another bullish divergence. But with that being said, this new potential bullish divergence is not yet confirmed. I want to make that clear because we have not yet confirmed this next low in place in the RSI. Because for example, let's just say if the price continues pulling back here, then of course that could continue pulling back the RSI into a new lower low. And in that case, if we have lower lows in the RSI and lower lows in the price, obviously there's no divergence there at all, which means we still need to confirm this potential bullish divergence on the 8-hour time frame with at least one, but ideally a few 8-hour candle closes in the green to basically cement a low in place. And if that happens, only if that happens, then I would expect another pause from this short-term bearish trend, kind of like what we saw back here at this previous short-term bullish divergence. And so overall, just in the short term, once again, as I've said in recent videos here on the channel, I'm still leaning more bearish than bullish. But when it comes to the longer term trend, right now, I'm still leaning more bullish than bearish until we confirm this invalidation, until we actually confirm a break to the downside below this support support, and in this indicator on the 4-day time frame. Of course, if that signal confirms, then I would start to flip much more bearish again on the larger time frames. But anyway, now getting into the Ethereum part of this video. This is on the daily ETH to US dollar chart, and obviously over the last 1 day, we have seen another drop to the downside straight into this area of support. And in fact, right now, as of recording this video, the price of ETH is trading below this area of support, which was sitting in between around 1650 to 1.7k. And now, with that being said, we have not yet seen a confirmed break below this support because we have not yet seen a daily candle close below 1650. And so with that in mind, of course, it is technically possible that this could just be a wick to the downside and we actually see a bounce back to the upside within the next 1 day or so. But if that does not happen, if we actually confirm a daily candle close below 1650, then obviously that would be a strong signal on the daily time frame pointing towards a larger trend reversal. And now in that scenario, if we do confirm a break below 1650 with a daily candle close, then in that case, looking at the next levels of support on the daily time frame, taking a look at the Fibonacci retracement tool from swing low to swing high on the linear scale. Next up, we have the 50% retracement level sitting at around 1.6k approximately, which should act as a bit of support. But if we see a confirmed break below 1.6k, then in that case, we have the golden pocket sitting in between around 1440 to 1480 approximately. And now staying on the daily time frame, and what is interesting is right now the daily Ethereum RSI is actually entering into oversold territories for the first time since the November 2022 bottom, because since then the only other time where the daily RSI has gotten close to oversold territories was of course this March low. And if you're looking at the time before those examples, we also saw the daily Ethereum RSI enter into oversold territories back at the June low. And so basically what this means for the price of ETH on the daily time frame is that potentially very soon we are approaching some sort of local low at the very least in the price of ETH. And this could still be the case even if we do confirm this larger trend reversal with a break below this support, because obviously even in a bearish trend on the daily time frame, we can still experience significant lows in the price of ETH and bounces even during a bearish trend. And so basically whether or not the price holds this support and either confirms a trend reversal or continues this larger bullish trend, either way, according to the daily Ethereum RSI, we are getting very close to some sort of low in the price of ETH and some sort of bounce, or at the very least a consolidation, kind of like what we saw back here and back here. And now if you're zooming into the shorter term, this is on the 6-hour ETH to US dollar chart, and obviously over the last 1 day, we have now seen that next leg to the downside, which I've been talking about recently on the channel, because obviously over the last few days, we have been playing out a very small bullish divergence, which has resulted in a small pause from this short-term bearish trend. But ultimately, unless the price broke back above around 1830, this bearish price target was still in play. And by the way, this bearish price target is sitting at around 1610. And so as you can see right here, the price of ETH so far has gotten within around $10 of this technical price target. So obviously congrats to any of you who took this trade, because obviously this bearish price target at around 1.6k became active on the chart from the moment we saw a confirmed break to the downside below around 1820. So once again, as I've been saying since all the way up here, in terms of the short-term trend, I'm still leaning more bearish than bullish, which means expect more bearish price action. But of course, trends do not move in a straight line. We often see short-term pauses from time to time. And now, if you want to know how to make a lot of money in crypto, even if the price is dumping using short positions, for example, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to automate a trading strategy no matter what direction the price is going, and the video in the bottom left shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.